Hello viewers, this is Bhaskar welcoming you back to Bhaskar's Insurance for you and me. In the last episode, we have discussed on the various covers that are generally available under individual personal accident policies, simply called as PA policies. We will now explore answers to some of the common questions that are raised while deciding on purchase of this product. First, let us see how are the benefits structured in the insurance policy. The different benefits of PA are classified into two groups. The basic covers or base covers or compulsory covers, that is one category, and additional or optional covers or add-on benefits. In many of the products available, the accidental death benefit alone or sometimes accidental death, permanent total disability, and permanent partial disability covers together are offered as basic compulsory covers, whereas other benefits are all offered as optional covers to be chosen by the proposer according to his need perception. As we have seen in the last episode, there are many benefits that are available for opting. While you purchase the PA policy, it's important to decide as to which of these benefits are essential for the customer to opt for and which can be considered as good to have covers. There is no hard and fast rule to decide which cover is required and which is not required. It is a balance between comprehensiveness of cover on one hand and affordability of premium on the other hand. In my view, basic covers of death, permanent total, and permanent partial disability covers are must have covers. While the probability of an accident leading to death or permanent disability is a low frequency event, the magnitude in terms of the long term impact on the individual and his or her family is huge. Hence, please ensure to opt for these covers. The quantum of benefit under other benefits like weekly benefit, medical expenses reimbursement, daily cash benefit, etc., is very low, and they can be considered as good to have covers if the premium amount is affordable based on one's financial condition. It is important to note that some of the covers under the policy are on benefit basis, that is, fixed amount becomes payable on occurrence of covered event. Some of the covers are on reimbursement basis based on the actual expenses incurred. A summary of major covers under the policy and how they are included in the policy is tabulated and displayed in the slide. You can pause the video and go through the description of covers, the type of cover and the benefit type in the slide which is there on display. The next important aspect to decide is how much of sum insured is right sum insured. Unlike in insurances like property insurances where the subject matter insured is the property whose values can be determined for insuring, it is difficult to assign a value to human life and hence it is impossible to determine what is a correct value of the person's life which can be insured. At the same time, permitting over-insurance can have adverse effect on the industry through encouragement of moral hazard. Over-insurance may tempt some insureds to make false claims. Hence, the insurance companies have laid down certain eligibility criteria on how much of sum insured one can opt for and can be permitted under this product by linking the eligibility to the earning capacity of the insured person. While this criteria varies from insurer to insurer, the sum insured allowed generally ranges from 6 to 10 times of the annual income of the insured person. This eligibility criteria may vary from benefit to benefit also. For example, it is possible that death benefit sum insured may be allowed up to 10 times the annual income, whereas permanent disability sum insured may be limited to 5 times the annual income also. The sum insured eligibility criteria is more stringent in respect of the temporary total disablement cover. As we have seen earlier, this benefit is paid when the insured person is fully disabled from engaging in any occupation due to accident, more as a compensation for the loss of wages during the period of disability. Hence, the sum insured is fixed in such a way that the compensation under this cover is not more than the wages the person would have earned had he not met with the accident. This is achieved by limiting the sum insured for this cover to 25 times of his monthly income, and per week benefit is fixed at 1% of the sum insured. For example, if the monthly income of the proposer is rupees 25,000, the sum insured eligibility for temporary total benefit is fixed as rupees 6,25,000, being 25 times the monthly income. In case of a TTD claim, per week indemnity works out to rupees 6,250, being 1% of sum insured, which is approximately equals to the weekly salary amount of the insured person. This is how the compensation amount is fixed to just compensate the wages for the period and avoid any profiteering. What about the sum insured for the non-earning members? The underwriting guidelines of different insurers link the sum insured of non-earning members like spouse, children, etc. with the sum insured of the earning member with a certain maximum cap. For example, an insurer may allow 50% of the earning spouse sum insured subject to a maximum of rupees 25 lakhs for non-earning spouse and say 25% of the earning father's sum insured subject to a maximum of rupees 10 lakhs for non-earning children. The next question is what happens if one takes multiple policies for personal accident cover? Can claim be made under all policies? The personal accident policies are known as fixed benefit policies. The base covers and some optional benefits under the PA policy provide for payment of fixed benefit on occurrence of the insured contingency. It does not work on the basis of reimbursement. Hence, if there are more than one policies which are triggered following an accident, all the policies will pay the benefit amount as per policy terms. So the multiple policies can pay for same incident. Further, there are certain covers like medical expenses which are on indemnity basis. In those cases, the insured cannot claim more than what was spent by him since it is not permitted to make profit out of an insurance event. However, we have seen earlier that the sum insured under the policy has been accepted by the respective insurer based on certain income criteria. Hence, while proposing for different insurance policies, you must have correctly declared your income details and details of other PA policies you are already covered. The sum insured must have been accepted by the insurers based on their eligibility criteria. In case of any wrong declaration in respect of income leading to non-eligibility of the sum insured covered, the insurers can take the ground of wrong declaration or non-declaration and the policy can become void. Hence, the correct declaration of income and other policy details is a critical step while taking insurance. The policy also provides for a nomination facility. In case of accidental death claims, the claim amount will become payable to the nominee. The premium rate payable under the policy is determined based on the nature of work being done by the insured person. The nature of work is an indicator of the accident risk the insured person is prone to. Hence, the premium rate is determined on that basis. If you look at the policy purchase process, it involves filling up of the proposal form with complete details, which must include the personal details of the insured, occupation and income particulars, other existing insurance details, the various covers being opted, sum insured proposed for, and the nominee details. A complete and correct disclosure of information in the proposal is a must, and of course, the premium payment is a precondition for the cover to start. If you look at the claims process, the process to be followed in case of a claim is listed in the policy document. It involves timely intimation of claim to the insurer, submission of claim documents within the specified period, generally about 30 days from the date of funeral or date of completion of treatment. The claim documents required are all listed in the policy wordings. Mainly, the claim documents required are proof of accident, proof of extent of disability, proof of duration of disability, proof of treatment, hospital stay and expenses incurred, etc., depending on the nature of claim. These are some of the important points one must know before opting for a personal accident insurance. Now check your insurance portfolio, and if you do not have a personal accident policy, now is the right time for you to buy one. In the meantime, please view, subscribe, like and share the video. I'll be back in next episode with another interesting insurance product. Until then, bye from Bhaskar.